These are 7 top stocks in after hours with big percentage gains today. Our review on VERO. Venus Concept Incorporated is a global medical tech company that focuses on aesthetic and hair restoration treatments, stuff like skin resurfacing, body contouring, and robotic hair transplants. They've built out a strong platform of both surgical and non-surgical devices, and they're distributing to over 60 countries, trying to reach not just dermatologists and plastic surgeons, but also family doctors and med spas that are jumping into the aesthetics game. Now, what's really moving the needle for Venus today is some serious financial maneuvering. They just secured bridge financing of up to $23.24 million from Madryn Health Partners, and the latest $2 million drawdown was funded on April 4th. This is actually part of an ongoing agreement that's been unfolding since last year, with multiple rounds of cash infusions over time, helping the company cover working capital and day-to-day operations. Interest on this loan is pretty steep, 12%, and it's secured by pretty much all their assets, which signals a sense of urgency in keeping the business running while they look for a longer-term solution. But here's the kicker. The stock exploded, up 139% after hours. That's a huge move, and it tells us that despite the debt load and high cost of capital, investors are seeing this bridge loan as a vote of confidence. It basically gives the company some breathing room. For a name that's been struggling, this kind of financial lifeline, especially when structured as a drawdown with flexibility, gives them time to reset, maybe get revenue back on track, or even explore restructuring or strategic partnerships. So if you're watching Venus Concept right now, this after-hours surge feels like a mix of relief and renewed hope from the market. The company's not out of the woods yet, but this cash could buy them time, and in the small-cap world, sometimes that's enough to spark a turnaround rally. Our review on WORX. SCWorx Corporation is one of those niche healthcare tech players that doesn't usually make big headlines, but today, it's making some serious noise. The company specializes in back-end data solutions for hospitals. Think, taking all the chaotic, messy information from hospital systems, stuff like item inventories, contracts, medical records, and cleaning it up, organizing it, and making it usable across different platforms. It's the kind of work that's invisible to patients but absolutely vital to keeping healthcare systems running smoothly. They're basically the data plumbers of the healthcare world. Now here's where it gets interesting. The stock is up a jaw-dropping 63% after hours, and that's a big move for a company this size. As of now, there's no big press release or headline to point to, so this spike could be sparked by speculation, rumors, or maybe even a leak of upcoming news. Sometimes with these microcap names, it only takes a small catalyst, a contract win, a tech upgrade, or a new hospital partnership to get traders excited. And when volume is low and float is tight, that excitement can snowball fast. It could also be that a short position is getting squeezed or momentum traders are piling in early on rumors. Either way, the move is sharp enough that it has people looking twice. Whether this rally has legs or not depends on what, if anything, is actually announced in the coming days. But for now, SCWorx is back on the radar, and clearly, investors are betting there's more to this move than just random volatility. Definitely one to watch closely. Our review on FMTO. Femto Technologies Incorporated, formerly known as BYND Canasoft, isn't your typical software company. They're carving out this super specific but fascinating niche at the intersection of tech, wellness, and women's health. On one hand, they've got a CRM software suite that helps small and medium businesses manage their day-to-day ops. But what really sets them apart, and what's turning heads, is their move into women's care technology. They're using what they call smart release technology to build data-driven products in intimacy, sports, beauty, and even medical wellness. One of the key products in the pipeline? The EZG device, a therapeutic system that delivers microdoses of natural oils like CBD into soft tissue to potentially help treat women's health conditions. Now, let's talk about what just happened. Femto stock is up 45% after hours, and that's after it already ripped over 400% during the regular session. That's an insane move. This kind of action suggests something major is going on, whether it's real momentum behind their tech, a new wave of investor interest, or just traders piling in on the volatility. There's been growing buzz around Femto as a speculative play in the wellness tech space, especially as more investors look for crossover stories, where biotech meets consumer tech meets AI, and all wrapped in an emerging market like women's health. The fact that this name is flying without a traditional press release tells you just how much hype is building. It's the kind of parabolic move that often invites both opportunity and risk. If there's substance behind it, like regulatory progress for their device or a distribution partnership, then there could be real long-term upside. But if it's just a hype cycle, expect some serious whiplash too. Still, it's rare to see a name like this come out of nowhere with that kind of firepower. At the very least, Femto is firmly on the radar now, and with this much volume and momentum, it wouldn't be surprising to see another round of headlines soon. Our review on DXF. Eason Technology Ltd, formerly known as Eason Financial Holdings, has shifted gears into two pretty distinct areas: real estate operations and digital security tech. On one side, they're helping property owners and businesses manage assets with consulting and entrusted services, and on the other, they're building out enterprise-level cybersecurity solutions and consumer-facing hardware. It's a unique mix. Traditional real estate meets cutting-edge data protection. Today, the stock jumped 32% after hours, and while there's no major headline driving it, that kind of move usually signals growing speculation or expectations bubbling up. Maybe it's early buzz on new contracts, a pivot in strategy, or just momentum traders jumping in. With Eason walking the line between physical assets and digital security, they're in a position to surprise. If they find synergy between their two business arms, or if the market simply starts giving more credit to under-the-radar tech plays, this could be the start of something bigger. Definitely one to watch. Our review on AEHL. Antelope Enterprise Holdings Ltd is an investment holding company that's leaned heavily into the live streaming e-commerce game. They're not just selling things online, they're helping other businesses tap into the power of live streaming as a full-on sales channel. On the side, they're also in the business management and consulting space, offering tech services like software development and computer consulting. Today, the stock jumped 33% after hours, which is a pretty sharp move without any headline news. This kind of action usually signals traders are positioning for something, maybe upcoming earnings, potential deals, or just catching momentum from a hot sector. With live streaming e-commerce booming in places like Asia, Antelope could be getting noticed as a speculative microcap tied to that trend. Definitely one to watch to see if this move has legs or if it cools off just as fast. Our review on TNMG. TNL Mediagene is a digital tech and media company that's kind of like a one-stop shop for content and data-driven solutions. They're working across everything from AI-powered advertising to e-commerce and event services. Their media portfolio covers a wide range, think news, tech, lifestyle, sports, even food, with recognizable names like The News Lens, iCook, Gizmodo Japan, and Business Insider Japan. Most of their action is centered in Taiwan and Japan. Now, the stock just popped 27% after hours, and that's coming right on the heels of a breakout that's pushed them over 50%. That kind of move doesn't usually happen in a vacuum. Even if there isn't a press release out yet, This kind of price action typically signals that traders are sniffing out something, could be buzz around expansion, M&A chatter, or even anticipation of new monetization strategies around their digital assets. Either way, a breakout move like this puts the stock squarely on the radar. It's got that blend of media familiarity and digital tech upside that makes it a compelling story, especially in a region where digital consumption is booming. One to watch closely. Our review on BTU. Peabody Energy Corporation, a major player in coal production, has operations both in the US and Australia, with a focus on supplying energy and steel production. They're involved in various coal segments, from thermal coal to metallurgical coal, and even brokered coal contracts. The company operates mines in key regions like New South Wales, Australia, and Alabama, providing essential products to the global energy and steel markets. Now, let's talk about the latest development. Peabody's considering an acquisition of Anglo American's steelmaking coal assets following an ignition event at Anglo's Moranbah North mine last week. Peabody's reviewing all options related to this acquisition and has made it clear that it's still in discussions with Anglo to fully understand the impact of the event. The company's also preserving all its rights under the current agreements, so it's not jumping into anything without safeguards. This news sent the stock up 15% after hours, with a massive 50% breakout. That's a serious move. A lot of this is likely tied to market speculation around how this acquisition might play out, especially with Peabody's strong position in steelmaking coal. If they end up adding these assets to their portfolio, it could provide a solid boost to their long-term outlook, making them even more entrenched in the global coal supply chain. Definitely a story to follow closely. Please subscribe, give the video a like, and watch more from our playlist. Thanks.